What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 22nd, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content. Really helps with the YouTube algorithm. It helps spread the word about my content, all that good stuff. Yeah, really appreciate everyone that supports the channel. You don't know how much it means to me that people are watching these videos, getting value from them. Today we're going to talk about the price action in the headline indices. We will go under the hood and check out our sectors and style factors. Talk about some of my trading for the day. We'll also go through some of these earnings reports that have come out, and we'll real quick touch on options order flow. Before we get into all of that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. Let's jump in here and let's take a look. S&P 500. I am recording this a little bit later. I was involved in a Twitter space with some other, really cool traders. It's always awesome to just chop it up with them, talk about what we're seeing in the markets, all that good stuff. But the benefit is that we can now see what futures are doing in the after hours market. So for today's price action, a really nice day for the S&P 500. Another nice finish. So this is 3 green candles in a row. And coming into today, I didn't have huge expectations. You always get the biggest moves when you're springboarding off of a highly volatile market. When that VIX is really contracting, off a very high level, and that VVIX is also contracting off of a very high level. Once you normalize and the musical chairs, all the chairs have been filled again, then you don't really get those crazy powerful moves anymore. So yeah, S&P 500 finished up the day 0.21% as measured by the SPY. Nasdaq QQQ finished up 0.66%. This was our big winner. IWM small caps finished down 1.59%, and the Dow Jones finished up 0.08%. So S&P 500, crazy as this may sound, we're once again extended. And, we're not nearly as extended as we were back here because this 20-day moving average has had some time to catch up. But I want to be cognizant of the fact, I don't want to be buying too much more up here. I think we had a great opportunity to buy, into this weakness, and really on these first couple days as we came off of the lows. I definitely, don't want to be as aggressive up here, because if you get super aggressive up here, then you lose the ability to be aggressive when you pull back. But yeah, really nice price action today. Let's go over to our NASDAQ. Oh my gosh, NASDAQ is ripping in the after hours. NASDAQ is trading. Oh my gosh, it made a new all-time closing high. This is awesome. So yeah, we had that big shakeout. And now we're trading, back up to the highs, and we're approaching this R2 pivot. So as we approach this level, it's kind of crazy how we went from overbought to oversold to overbought just very quickly like this. As I look at the picture objectively, I do want to be in the headspace of taking some targets. And the reason why is because we have the Fed meeting next week. A lot of times we do see some profit taking from institutions into the Fed meeting. So I want to be cognizant that, hey, things look awesome. I'm not complaining. This is great. But I may want to be just cognizant and not really thinking about, taking on a bunch of new swings and all of that stuff. Let's jump over to our Russell. Russell was the weak link today. And I thought we might get a more sustainable rotation into some of these reflation plays, small caps, etc. I actually thought we might get a test of this 20-day simple moving average. We could certainly still do that. This was essentially we just gave back some of these gains, but we also have to be open to the fact that maybe this is just another bounce within this bearish trend of the small caps. Because you can see here we broke down, then we got a 2-day bounce, then boom, 5 days straight of pain, 2-day bounce. Could we actually be tagging this 200-day? It's definitely possible. So with these small caps, definitely trying to avoid those for the most part. Small caps are weak, but you can see they're up slightly in the after hours trading. And then Dow Jones finished the day up 0.08%, and we're really just consolidating right around this monthly value area high. We're essentially trading right up into resistance. So yeah, these four indices, they're all essentially like saying a different story. So it's pretty cool. Like, depending on which areas of the market you're focused in, you're having a much different experience right now. And that'll bring us over to the market breadth. And this really drills home what I'm saying, where you're having a different experience depending on where you're at. You can see this market breadth, despite the fact that 3 out of the 4 of the headline indices were positive for today, there was a lot of weakness under the hood. We had SPY negative breadth, IWM negative breadth, Dow Jones negative. The only index where we had positive breadth was the NASDAQ. So what this is telling me is, we're still in this trade of growth slowing. So buy up treasuries, buy up duration proxies like technology. As you'll see when we look at our treasuries slightly negative after hours, but treasuries posted a positive day. Didn't close right on the highs here, but positive nonetheless. So I'm curious to see, do we continue to get strength in treasury, strength in tech? Is that just that theme, does it continue? Let's check out our FinViz heat map, and let's take a look at the strong areas of the market versus the weak. So these tech names all posted really nice performances. Wow, and Amazon closed. Did this close on the highs? I entered an Amazon call spread. Let's go. Yeah, it did. Amazon's looking awesome, looking like a snack here. And Texas Instruments, this name closed pretty much on the lows. Yeah, Texas Instruments, not a good session. And it missed on the earnings. So we're getting a lot of good information as we are making our way through earnings season here. This is still, I would say, the beginning of earnings season. I love earnings season. I think it's cool seeing what the companies report. And I love seeing new trends established. So you can see software was strong. We had healthcare, which was strong. So this was another risk-off day of trading. You might think the headline indices were up. This was risk-on. No, this is actually kind of risk-off because we had all this strength in the really defensive areas of the market. Sectors, you'll see that illustrated here. We had solar stocks down, the ARC funds down, and we had major weakness in the regional banks, KRE, the SPAC ETF, a lot of these more speculative areas of the market. And then the strength came, you can see this XLK ETF was up, IGV software was up 1.27%. That was our best performer on the day. And medical devices were up 1%. So yeah, those are very defensive areas. Moving over to our style factors, you'll see that illustrated as well. Cyclicals down 1.91%. Our best performers for the past 2 days were essentially our worst performers today. So this goes back to, for some of these areas of the market, if you're buying the dip, you're okay. So if you're buying into weakness, but if you're buying into strength, you're probably not doing so well. High beta stocks, yesterday I believe they were up 3%. So if you chase that, now today this index is sort of hitting the wall. We'll have to see what it does moving forward. But yeah, buying the weakness has been a good idea. And then same thing with the defensives. The defensives actually had their first, weak day in a while yesterday. If you bought into that weakness or you held on, you did pretty well. If you try to short into that weakness, you did not do so well. So yeah, best performers for today, growth, ETF up 0.66%, and our defensives ETF was up 0.36%. Let's take a look at some of my trades for today. I did some options trading. SE, I tried to play this one for a breakout. I got long the August 20th 290 strike calls. And this is a good example of a breakout that did not work. So let's take a look. I think it's very important to check out, times when it works, times when it doesn't as well. So this one looked like it was pushing through that pivot today. I entered a long position, and this breakout, just didn't come to fruition. So I, did the right thing. I stopped out of the trade. Said, hey, this didn't do what I expected. I was expecting a nice breakout. That did not come. and I'm going to exit that one. So stopped out for a minimal loss here. These are the ones where, I'm proud of taking these losses. Stopped out for 1873 because that's, okay, I know I'm doing the right thing, and I know over time I'm going to make money if I approach these that way. Another trade that I did, Twitter reported earnings today. I have a long position in Twitter that I've had on for at this point like a couple of months, maybe like 2 months now, I'd say. I'm long the 55 strike January 2022 calls, and I'm sitting on a nice winner in those right now, up well over 100% on those. And what I've been trying to do is just chisel away at my cost basis. So Twitter got very extended. I diagonalized these calls. I think I sold like the July call. They expired worthless, so I knocked down my cost basis. And now into the earnings print, I was like, you know what? I don't know what they're going to report. Maybe they have a bad quarter. I could lose a lot of these gains. So to stick with the position, I'll diagonalize half of it. So I sold the 80 strike calls, and they were trading at a pretty nice premium. I was like, wow, there must be some expectations that this thing could really have a nice move. So I sold those for 61 cents, and I was able to reduce the cost basis of my full position from 671 to 641. And Twitter reported earnings and had a nice report. Nice. Let's go, team. Twitter is trading in the after hours. Made it all the way up to 76. Jeez, that is a nice move. You can see right now we're at 73. So who knows? Twitter could end up with a power earnings gap setup. And one of my members of the Pristine Capital community, shout out to him. I'm not going to use his name, but he asked the question of like diagonalizing positions or using diagonals. And, just for his benefit, for example here, like say I had diagonalized my full position, it does reduce my risk a little bit and it allows me to pull in some premium. But if let's say Twitter really knocked it out, and who knows, this could still happen tomorrow. The short 80 strike call that I sold, it expires July 23rd. Yeah, so it expires this Friday. Yep. So let's say Twitter, the reaction's good, institutions start buying, and let's say we not only get back up to this high tomorrow, let's say by Friday, this stock's at $85. Do I think that's going to happen based off this reaction? Probably not. I would say I'm probably just going to make money on the options I sold. Let's say like Twitter runs up to like $90. I only collected 61 cents for the option that I sold. It's going to cost me a lot of money. And that really could have, say if I hadn't sold them, it goes up to 90. That would have been like, oh my gosh, this trade just made my year. Because I think that would make this like a 300 or 400% return on these Twitter calls that I have. So that's really the trade-off when you diagonalize things. You remove that upside tail of the probability distribution. And a lot of times when you're long calls, that upside tail is really what allows you to win over time. So that's a bit of a side note. Yeah, Twitter had a nice report. Snapchat also had a nice report. I know a lot of people are long this name as well. Snapchat trading all the way up to $73. So this one is essentially, approaching that prior all-time high. We'll have to see if we can break through and make a new high. And I'm going to be looking a little bit deeper at the earnings after I record this video. So we have those two. And then another trade that I put on Amazon, I put on a July 30th, 36.90 by 3,700 call spread for $3.61. And I sized this one for max loss. It's sort of like a lotto trade if Amazon has a really good sequence here. But yeah, I saw there was a ton of options flow, and I thought it was, having a really nice bounce off the 20-day. Amazon looking good so far. Boom. Yeah, that's a really strong candle. So a lot of times when I see candles like this, I look at this and I'm like, I know almost every trader or investor that, actively invests in the market and, they do homework every single day, every single night like me. I know they're going to look at this tomorrow, and this most likely is going to be at the top of their watch list. So I love putting on a trade. The trade, works to a certain degree, and I'm like, I know this is probably going to show up on everyone's watch list tonight. That's always the best feeling. So we'll see what Amazon does, but yeah, this is a pretty good entry for day one at least. Day one already in the money. Yeah, and then other than that, no activity for me. Let's real quick, we'll pull up some options order flow. And this is, just good to go through. Speaking of, Amazon being the option flow leader today. This is our VigTech platform. And I love doing this options race. This thing is just like so cool to watch, honestly. It's kind of like fun. Yeah, you can see throughout the day how the options flow progressed. And Amazon, just look how much premium this bad boy's taken in. It's even surpassing Tesla. And yeah, for the most part, the flow leaders, it's typically like mega cap, highly liquid names that see a lot of the order flow. So let's jump into our Tradescape. And yeah, Amazon, we saw earlier, flow leader, fair amount of puts and calls. So I'll have to see what happens with this name, but I'm liking the price action for today. Royal Caribbean seeing more flow. Royal Caribbean, this one's popped up the past couple days. I believe this one had a dip in today's session. Okay, so yeah, sort of consolidated sideways. A lot of these travel names, like I'm long Expedia, very similar chart, where they had the really nice move past 2 days, and now today they sort of took a breather. Let's see Airbnb. Yeah, this one closed slightly positive, showing some relative strength in this group. I'll be watching this one moving forward. And let's see if anything else really sticks out. Let's see, did Microsoft stick the landing here? Microsoft, lots of call flow for September and October. Looking good. I see some July activity here. This was a name I was watching into the open. Yeah, and Microsoft stuck the landing. So that's just how it works sometimes, where this morning I was like, okay, I'm either going to enter SE or Microsoft. Very similar setups. And I entered SE. SE did not stick the landing. Microsoft did, though. So, sometimes that happens where you're looking at two names, you enter one, the other one has the move that you were expecting. That's just how trading works. You're playing the probabilities, playing your edge, and over time it should work. Like if you actually obey your stops and you get out when you're wrong, that's the key there. And then when you're right, like if I had entered Microsoft and this one had stuck the landing, I wouldn't have taken it off. But because, the one I entered didn't stick the landing, I stopped out. And that's really, how you win over time in trading. So we have Microsoft. I see some Apple flow as well. Futu. This one is interesting. So I stopped out of Futu like a while back. This one had some nice options flow. But Futu hit a wall. Look at this. Just got rejected down 7%. Some of these other Chinese names are looking good. PDD was up 0.42%. Billy, I think, also hit a wall. So yeah, it looks like the more like small cap China names didn't really do so well today. Baba, which I currently have a position on, finished out up 1.4%. So this name looked pretty good. Some names that I have on real quick, I'll just go over that are, approaching my target. This one, Global E. In this, I might actually take this little segment out of the video moving forward. This will probably be just something I go over with Pristine Capital members. But this year, this is sort of like my trading plan for Global E. I entered down here, a couple days ago. We're starting to approach my target. And so at that point, I'll definitely clip at least a little piece of this position off. But I love the way this one is shaping up. This Global E, this thing is, crushing it. And we all know why. This is an e-commerce company. They're linked up with Shopify now. They help people take their e-commerce companies global. So this is like the TAM is huge. They essentially print money like classic. And I moved my stop up a little bit here. So I moved my stop up to below today's low of the day. That way, even if this one starts to roll over from here, I'll lock in a winner. And then DigitalOcean, similar deal. This one's had a really nice few days of a move since I entered down here. And I also moved my stop up to this 50 spot 7.2 level. So yeah, just trying to be more proactive and really planning everything out and just being much more meticulous. That way, when things happen, you essentially have a plan for every scenario. Like every day, if you're sort of like updating your trading plan, that's how nothing's going to catch you off guard because, you're planning things out ahead of time. So yeah, those are just 2 updates. With that being said, that about does it for this market recap video. Hope you all had an awesome trading session, and I will see you all tomorrow.